It's cheaper to rent now than to own, but the long-term value is, you're not building equity and you're paying somebody's mortgage off. So it's a big, huge, should I rent or should I buy? With housing affordability crazy high as it is, it's understandable that some people are choosing to rent. Now, renters are spending less than quarter of their income on rent, which is way better than paying more than 50% towards your mortgage. Granted, you get to write some of that off. You get to do all sorts of different things on taxes, etc. Nowadays, it's in regions. It depends on where you are. Like in San Jose, it's not going to be that easy because you're going to be paying like $2,500 to $4,500 for a house per month, and that's about equal. But let's take a quick look into this real quick. Drop this here so you can see my mug. Renters are now spending less than a quarter of their income on rent, and this is typical households. 23% of income now rent in September, down from 25% a year ago. As a market post, 26 annual straight decline in second monthly dip since March. Rents decline in September according to Realtor. But here's the index right here. Miami, Los Angeles, New York, Boston, 5 major metros, right? The affordable rent ratio, everything's down. Actually, it's super cheap to live in San Diego compared to San Jose. Something to think about. Share of income, 33. These are high end. This is low end. Now you average it out, it becomes 24 point numbers. Austin, Round Rock area is now 16%. Oklahoma 16%. Columbus 18, Minneapolis is 18%, and Bloomington doesn't show up for some reason. I don't know why that's there. Rental markets with the most improved affordability: Jacksonville, San Diego, Miami, Denver, Austin. Funny how San Diego was on the top, but now it's down 3%. You're still spending 31% of your income, but it's down 3.4%, which is good. Rents are coming down. So the question is, do you rent or do you buy? And a lot of people are opting to buy right now. But I can tell you the market has absolutely come to a standstill. We do have houses that are going into contract, just not as many. And what we're seeing is crickets. Open houses. We're not getting a lot of traffic. It's almost like everybody's kind of in a holding pattern trying to figure out where the market's going to go. And a lot of people are thinking, oh, I'm just going to wait until the market crashes or comes down and then I'll buy. But if everybody's doing that, that means there'll be more competition when the FOMC and the Feds lower the rate down another 0.25% this month. And I think a lot of people are actually going to wait until November to see if they come down a third time, which makes it 0.75 of a point drop overall in the last 3 months. That would be a huge bolster to bring more buyers into the market. I know we're talking about retail pricing on the Fed rates, but it all translates greatly into real estate because it's still kind of a retail thing, but it's short-term rates. Anyway, regional divides in quarterly home price trends. Now, everything that says here shows that there's a positive, and there's not a lot of charts to look at. But understand that prices are continuing to hold all over the place, except for in certain pockets like Las Vegas, Austin, St. Louis. Certain areas are Florida, pretty much all of Florida. They're all kind of, those places are losing value, but other places are gaining value. So overall, in those regions, they're increasing 2.2% nationally. It's crazy, right? Midwest prices in the Midwest rose 4.6%, and in Northeast, 5.6%, 0.4 in the South, and 0.2 in the West. So housing price maintaining overall. There are some regions where you can go and get a great deal, but you probably won't get it in Santa Clara County, San Jose, Silicon Valley, the Bay Area, outside of like Napa or Hollister type areas. 90 days on market. This is San Lorenzo Drive in 9.5, 4-bedroom, 2-bath, 1,600 square feet, built in 1968, and it's right near Cahalan Park. And it's been on market 138 because sellers don't need to sell. And that's what the price was worth back in April when we tipped the market. That was the peak of the market. It was April. If we sold in April, it wouldn't have been a problem, but you wait until June because you're like, I'm just going to wait, see what happens. But the market always slows down in the summer. So there you are. This house will not sell at 175. They're waiting for the buyer to come along. And honestly, guys, if you're not in the market to find a good deal, a lot of these houses have stubborn sellers and there's nothing you're going to do about it outside of you got to move on and find something else, right? This is a bank-owned property of the week. This is in San Jose, 95112, not my listing, 13th Street. $1.2 million, 1,300 square feet, 3-bedroom, 1-bath. And this thing looks like it's 100 years old. And it's right off of Old Oakland Road. N101. And yep, been on market 55 days because it's overpriced. This thing should be selling for 800, 600. But the bank says, we're going to wait. We're going to find the right buyer. And there's a lot of homes in, I'm going to say 5 homes in Santa Clara County that you can look at right now if you're interested. There's even one in Santa Cruz, 2-bedroom, 1-bath detached home built in 1956. That might be a great buy for you if the floor plan works, but this is a fixer-upper and it's priced right. How many days on market? Let's take a quick look. 3 days. So this thing's going to get snapped up. All right. 40 days on market. It's going up and up and up. Everything's kind of slowing down for the market like we expected because rates are still high. We don't have the inventory, and whoever does want to sell is not in a necessary situation unless it's a bank owned or short sale, but that's like 1% of the inventory right now. 90 days on market's climbing a little bit. We're at 121. And if you look at the graph right here, 90 days is red. You're seeing it slow climb. In California, it climbed a little bit, as well as the Bay Area. We got a fresh set of inventory for sale. Sorry, San Jose numbers right here. We're seeing things kind of dwindle down. Inventory shrinking, but that's because sellers are rather off market than sell lower because they don't have a need to sell, they have a want to sell. Same thing in Santa Clara County. We're seeing the inventory go down, days on market, and expired withdrawals and back on markets are climbing. As a matter of fact, we can take a quick look back on market in Santa Clara County. We have 83 homes that go back on market in the last 7 days. What does that mean? It means they got into contract, something didn't work right, whether it was the buyer or the seller. The buyer didn't like it, buyer couldn't qualify, the seller said no to any repairs. They said, screw you, we're going back on market. I just did that. We just got contingencies lifted yesterday after them being late 7 days. I had to be patient with them. I couldn't be a dick and push them at it because if they pulled out, we probably wouldn't have gotten the price that we got. So it's just one of those things where you have to be kind of patient in this market. You have to work with agents, and buyers know that. So if you come here and say, I'm the king of the hill and everything I touch is gold, you're going to be sadly mistaken because it's not working that way. The market has definitely shifted. Sellers can't be spoiled anymore. You have to work with buyers. And it is what it is. You say you come in as is, and then all of a sudden you ask for $75,000 off. No, you can say no, we'll put it back on market, but then, there's different ways of negotiating, and you can be a pit bull, or you can do it diplomatically, or you can do it the quiet way and get things done. And that's what we're doing with this other listing that I have. So houses are still selling. That's out there. Deals are to be had. If you look at a house that's on market